Could this fall be the best buyer's market we've seen in years? Let's find out. Hey there, and welcome back to Bald Prairie Real Estate. My name is Matthew Pfeifer, real estate agent in Regina, and that's my trusted assistant, Matilda. So will this fall be the best buyer's market we've seen in years? We're gonna find that out. This is the weekly news recap where I go through what I think are the most interesting Canadian real estate related news topics and give you my thoughts and opinions on them. But of course, we gotta start things off with another terrible bad dad joke. What is a sock's favorite type of vegetable? A tomato. If you have a terrible joke I can use in a future episode, put in the comments below. Let's get into this week's news. First off, let's look at the Canadian Real Estate Association monthly stats. No release stats come out on the 15th of the month, and so I should have been talking about them already. I'm a little bit behind, but we're still gonna get you up to speed on some things here. The quick stats are sales were slightly up month to month in August, but down year over year. New listings up about 1% month over month. The benchmark price basically unchanged month over month, down about 4% year over year. And the average price is basically unchanged year over year. So, well, you heard unchanged a lot. That's pretty much the market trading sideways right now. Let's do a deeper dive. Recently, news headlines and every YouTube video I think I've seen out there is awash with titles about how there's this new massive wave of new listings on the market. Well, nationally, there's about 177,000 homes that were listed for sale in the month. Do you know what the long-term average is? 220,000. So we're still nationally below the long-term average. Yes, places like Toronto and Vancouver way up in new listings, not so much the case in other areas of the country. Looking at the sales to listing ratio, I think this is another good one here to take a look at. That's of course comparing how many sales are happening versus how many new listings. The long-term average is 53%, and last month it was 53% as well. Yes, it's true. Typically, half of houses don't sell. Looking at the year-over-year price chart, we see Ontario and BC, prices are down year over year. And then the rest of Canada, prices are up. Yes, I know BC and Ontario combined is about 50% of the national population. So in other words, 50% of the country saw home prices increase this year. Everybody talks about prices being down, but generally they're talking national stats or only referencing Ontario and BC. But the Ontario-BC effect on the national stats is significant. You can see that's only two provinces where prices are down and the national average is essentially unchanged because of how much they weigh heavily down and up on the national stats. And that is why when I do my monthly Canadian real estate market updates, I cover individual markets and talk about them as individual markets instead of just lumping them into the national stats. Next topic here is the Competition Bureau launching an investigation into the Canadian Real Estate Association. There are two major points here the Competition Bureau is looking at: commissions being paid entirely by the sellers and what's called a cooperation policy within the Canadian Real Estate Association requiring agents to put houses on MLS once they've been listed. Let's start off by talking about commission rates. When it comes to commissions, right now, the sellers are required to provide a buyer's compensation. That could be as little as $1, but it's a requirement to put your house on MLS. Now, this was the subject of a very significant lawsuit down in the United States, and they basically went against the National Association of Realtors in the United States, saying that this can no longer be a requirement. So if you look at the states real quickly right now, what you're going to see is that it's no longer not only a requirement, but also sellers and sellers agents aren't allowed to advertise in any way, shape, or form if the seller is wanting to offer a commission for the cooperating buyer's agent. There's three major components to this argument. The first one is, why should the sellers be required to pay any commission at all to the buyer's agent? And that's an agent who's going to be actively working against them to try to get a lower price for that house. The second is, do commissions being paid entirely by the sellers drive up home prices when the buyer doesn't have to pay that agent independently? And the third point is, do agents steer their buyers towards houses with higher commission rates? So let's look at them individually. Starting with, should a seller be required to pay compensation to a buyer's agent? And I think there's a lot of merit to this argument. And in my mind, no, it shouldn't be a requirement. If they choose to do so, great. And they can advertise that if they want to. Now, I think and I see a future where this is going to become standard practice, that buyers will actually have to pay their buyer's agent independently. And it's going to have a significant impact on our real estate market, because I think you're going to see a large number of buyer's agents disappear. The ones that aren't very good at their job and can't show their value to their buyers, justifying the prices they want to charge, you're either going to have to charge less money or not have a business at all. The agents that are very good at showing the value, helping their clients through the entire process, well, they're going to continue to exist. Buyer's agents aren't going anywhere, but there will probably be fewer of them, and I welcome that. The next argument is that when the sellers are paying all of the commission, it results in higher prices the buyers have to pay. And yes, it does. Full stop.
Come on, really?
The sellers are going to add the price they're paying in commissions onto the total purchase price. So the buyers are not only paying that commission in the purchase price, they're obviously paying for it over the entire course of their mortgage. But if they're not paying the buyer's agent, does that mean prices will come down? I'm not personally convinced that that will happen. When I look at for sale by owner homes, generally the price they're charging is pretty similar to what the price would be if it was for sale on MLS through a realtor. In this case, the sellers are just pocketing the money themselves and not really offering much of a discount, if any, to the buyer's agent. Maybe this changes when all buyers are paying their own agents. We'll have to wait and see. But it also means that you could see sellers saying, you know what? I'm going to offer a buyer's agent more money. I see this all the time. They're trying to steer buyers to their listing, and it becomes more prevalent when the market slows down. So even if the sellers aren't required to pay a buyer's commission, they may still want to do that because they want buyers to be steered towards their listings. And that brings us to agents steering buyers towards houses that pay them more money. Does it happen? Yes, absolutely it does. But generally, it's going to be from agents that aren't selling a lot of houses and aren't very strong as an agent themselves. The good agents that are selling a lot of houses, they really don't care what that commission rate is. They're looking for the best house for their clients because they're more focused on the long-term health and survival of their business. This is something personally where I have never looked at what I'm actually getting paid when I show a house. I've never cared because I've always taken the approach that if I do my job right, I put somebody in a good house, they have a good experience, they're going to recommend me to all of their friends and family, and I'll make significantly more money in the long term selling all of them houses than I would if I steered that individual buyer to a house that paid me 0.25% more. The second major component of this Competition Bureau investigation is the Canadian Real Estate Association's cooperation policy. And this is actually a policy I'm in favor of, but I can see why the Competition Bureau is going after the Canadian Real Estate Association for this one. It's kind of low-hanging fruit and probably one they can easily get changed. So right now, as an agent, once you start publicly marketing a property, you are required for it to be on the MLS system within 3 days of you starting your marketing. I get it. I'm a person who does this as well. You've seen it before. Coming soon posts, look at this great new listing, and then you see it on MLS a few days later. In the meantime, the agent is trying to show all of their buyers these houses and get them in before there's too much competition and potentially sell the house themselves. The Competition Bureau's argument here is that this is unfair towards smaller brokerages, which may not be able to get the house up on MLS before that 3-day timeline expires, or for brokerages that are not MLS brokerages. Now, the argument that a small brokerage couldn't put this up in time, I think is absolute hogwash. It takes all of about 20-25 minutes to input all the data and get the photos up. So if the admin staff or the agent themselves can't get the listing up within 3 days, yeah, I'm not just gonna buy that argument. I think it's crap. Wrapping this all up, at the end of the day, the MLS system was created by the Canadian Real Estate Association, and it's paid for and maintained by them and real estate agents through their fees. The idea behind MLS was that all the agents put all their listings in one place, all the buyers be able to see them in one place, a win-win for everybody. At the end of the day, this is their marketplace that they've created, and in my opinion, they should be able to create the rules for that specific marketplace. But what do you guys think? Should the Competition Bureau be intervening, and what do you think about these two major arguments? Let's get into this week's best mortgage rates. Starting with insured, the best 3-year fixed is through Radius at 4.29, and that's a drop. The best 5-year fixed is 4.14, also through Radius and also a drop. When it comes to a 10-year mortgage, the best rate I could find was through the Bank of Montreal at 5.68, but that was a special promotional rate. On the variable side of things, the best adjustable rate mortgage was through First National at 5.5% unchanged, and the best fixed payment variable, 5.3% through Manulife, also unchanged. On the uninsured side of things, the best 3-year was 4.79 through B2B, and that's slightly up. The best 5-year was 4.59 through Manulife, that one is up. The best 10-year I could find was actually pretty good through Desjardins, 5.19, that's unchanged from last week. When it comes to variables for a adjustable rate mortgage, 5.6% through Desjardins, a really tiny drop from last week, and the best static variable, 5.95 through Strive, again, a very small increase from last week. When it comes to the big five banks, the best 5-year insurable mortgage I could find, CIBC still 4.34 unchanged, TD 4.49 unchanged, Bank of Montreal 4.67 unchanged, RBC 4.74, small increase, Scotiabank 4.79 and a slight increase on that as well. Remember that the lowest mortgage rate available isn't always the best mortgage rate, and the rates that you are quoted vary by region, by how much you're putting down, the closing date, insurable, etc. There's a lot of variables. So just because you heard this from me doesn't mean you could potentially get that. I'm doing my best here to provide you the best options though. Real quick pause here. If you're thinking about buying a house in Regina, obviously I'd love to help you out. But if you're somewhere else in Canada, don't worry, I can get you set up with a perfect real estate agent that I'll handpick for you. If you check out the description of this video, you're gonna see a link to my calendar where you can book me in for an agent recommendation consultation. I'll give you a call, learn about what's important to you in a house, in a real estate agent, and I'll get you set up with that perfect agent in your market. And now let's get back to the video. Now let's find out if this fall is gonna be the best buyer's market in years. So this article is out of an Ottawa newspaper, but I've seen it replicated all over the place. It is the best market we've seen in years is the idea. And it's specifically targeted towards buyers because interest rates are coming down, prices are coming down, inventory's up. It's the best time for buyers. It's the best market. And I really don't like this idea of the best market or good market, bad market, that type of thing. What is the best market available? Well, it really depends. Right now, maybe it's a little bit better if you're a buyer trying to get into the market because of the reasons they've stated. Okay, that makes sense. But say for sellers, people always ask me, is it a good market or a bad market right now? Well, okay, in my market right now as a seller, it's probably a quote unquote good market because you're gonna sell your house. Lots of buyers out there probably get a good price for it. But most sellers then become buyers. So they have to then compete against the same thing that would have made it easy for them to sell their house. Not very often does somebody sell their house, completely walk away from the market and never buy anything again. So I don't like this idea of good market and bad market. I think there's a better term to use, with more active market versus less active market. Maybe that's more applicable, but there's so many variables that go into whether it's a good time or bad time to buy or sell. And I know everybody's trying to time it up right, because you got to wait for this type of thing to happen because then it'll be a better market. And I just think that's a terrible way to approach buying a house. And the same thing when it comes to selling a house. You never know when that buyer is looking for your particular house. Best example I can think of recently is that house that had a pool. It was a standout selling feature of the house. We put it up for sale in January. You would think, when it's full of snow in Saskatchewan, that is a terrible time to sell a house and market a house with a pool because you can't really showcase that. Well, guess what? We sold it right away because there was a buyer that was looking for a house with a pool in that neighborhood. And in my city and in this neighborhood, there's not a lot of houses that have pools, especially in this particular price point. So these buyers, when they found a house that fit their needs, were gonna buy it because it had a pool. They didn't care when they bought it. That's what they were looking for. And the same thing on the buying side. You're waiting for a better market. Well, if you're waiting for a better market, you're hoping, whether prices come down, interest rates change, all those type of things that you can't predict. But at the end of the day, what if the house that fits your needs best isn't available? Or what if it comes available sooner than you expected? That happened with me personally with my wife. I had the house that we currently live in, and I'm recording this video in right now. This house came up for sale about 4, 5, 6 months before we were really ready to buy, but it was the right house. It fit all of our needs, and we chose to buy it because it was the right house. You've heard me say this a million times over, and I truly believe it. When you made the decision that you're going to buy or sell a house on the buy side, you set your time frame, buy the best house you can, get the best deal you can at that time. When you're selling, because it makes that, that decision, it's the right time to sell, you sell your house, you get the best deal you can available at that time, and you move on to wherever you're going next. And you know what you should do next? Check out this video right here. Leave me a comment in the comment section below, and if you like this video, give this video a like. As always, guys, thanks very much for watching.